Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, Ukraine seems to have massive support from NATO, but how long will that last? I'll ask geopolitical expert Ian Bremmer if Western resolve is deep enough to keep Russia in check. Then it's the Barron's Mid-Year Roundtable. We'll tell you what stocks our top investors are buying now. And later, the Barbenheimer double feature is coming to a theater near you. This odd movie pairing is creating investment opportunities. But we begin, as always, with three things investors ought to be thinking about right now. Stocks rallying this week on cooler than expected inflation data. Can the economy pull off that soft landing? Big banks kick off earnings seasons Friday with strong numbers. More to come next week. We'll tell investors what to watch. And then Microsoft winning its case against the FTC to buy Activision Blizzard. Will that lead to a flurry of M&A? On the Barron's Roundtable, my colleagues Ben Levison, Carlton English, and Al Root. So, Ben, once again, a great week for stocks. What powered the buyers this time?
Well, it was this inflation number that we got. We had a fantastic week. The Dow and the S&P had their best week since March, the NASDAQ since January. And this was despite a strange rebalance that's going to happen in the NASDAQ 100, where the big stocks there just got too big. So Apple and the other big tech stocks, they're going to get knocked down a bit. And that caused them to fall on Monday. But they still had this fantastic week. And that's because of inflation. Inflation dropped down to 3%. It's dropped from now 9.1 to 3% faster than really at any time since 1950. It's amazing. It means that the Fed is probably not going to have to raise rates so much, and that should send the market higher.
So I got to tell you, Ben, I like bull markets, but I prefer hated bull markets to this bull market, which is maybe starting to be recognized as such. In fact, the meme stock ETF was up 10% in 3 days this week. That starts to get contrarians a little worried.
It does. I mean, the meme stocks, whenever you see those things do well, you get a little frightened. But this was the kind of week where it's more about bears saying, you know what? I'm not sure I want to be short these things anymore and covering their positions. And I think it was actually anyone going out and saying, oh, I got to own these crazy things because they're going up.
Alrighty, I don't know, though. Anytime anybody throws in the towel, I get worried that the trade could go the other way. Another new dynamic, the dollar is getting crushed after so many years of strength. Does that mean the currency markets are sniffing out an end to rate hikes?
I think it does. I think that it's looking at what the Fed is going to do and that it's not going to have to hike rates as fast as the ECB or Japan's going to, and that sends the dollar down. But I think it's also about going back to the idea with the meme stocks that people are a little less frightened. And when people are frightened, they buy the dollar. When they're less frightened, they sell to buy other stuff. And I think we're seeing that, too, with the dollar. And that means you can buy stuff like gold. You can buy material stocks, and they're going to do well.
What are you looking ahead to next week, real quick?
We got some earnings coming. We got Netflix, Tesla. The one thing that could throw a hitch here is that earnings so far have been very good, and that might raise the bar for the others who are going to be reporting in the next few weeks.
Speaking of good earnings, Carlton, we had a few banks reported on Friday. The numbers were pretty good. The stock market reaction was kind of muted, though.
Yeah, stock market reaction was muted, but let's focus on the positives. One, you have J.P. Morgan and Wells Fargo benefiting immensely from rising net interest income. Still able to earn more interest on new loans. So far, not facing too much pressure to pay that interest out on deposits. That's probably going to change soon. But you also do see banks, they're getting worried about the economic climate coming up, deal making, trading, some of those things that had helped banks 2 years ago, not looking so good.
When you see more money flowing into the credit card balances, that's actually good for the banks, but worries me a little bit about the health of the consumer. Are people feeling stretched?
Definitely compared to where we were, maybe 2 years ago, because those pandemic cash piles are definitely coming down. But to hear the bank executives talk about it, they're seeing more a normal credit cycle happening, which is those big cash piles being spent down. People are going to have to tap credit again, looking a little bit more like 2019. So far, not looking like a recessionary type situation.
One more interesting dynamic, which is that the Fed is talking about all banks with more than $100 billion in assets having to increase loan loss reserves. How does that trickle down to the investment world?
Yeah, so, first on the consumer side, for the banks, that means there's consumer and commercial. That's going to mean less lending. And Jamie Dimon on the call Friday morning put it perfectly where, if banks have to hold less capital, they're unable to lend as much. Huge opportunities for your Blackstones, Apollos, which actually hit an all-time high this week because people are still eventually going to be borrowing, or at least commercial companies will, and they're just going to turn to private equity to do it.
Those are the lenders already. So, Al, if you're a gamer, the big news is that it looks like Call of Duty, no matter what happens, will be available on all platforms.
Yep.
If you're watching regulators like we are, it seems like Lina Khan chose an odd hill to die on here.
Yep. So just to review Activision, Microsoft wants to buy the game publisher. That deal was put on hold by the FTC and the UK authority. Microsoft won its case against the FTC
in court.
So, Activision Blizzard went from 83 to 91. The deal price is about 95. But to your point, deal activity under the Biden administration is way down. For over the first 3 years or 2+ years of the Biden administration, deal activity is down about 30 to 60%, depending if you look at the number of deals or the total value versus the same period of the Trump administration. So this win for Microsoft is a big deal.
Okay. Interest rates, of course, are part of that. Higher rates mean you don't have so much free money to throw around. But the broad trend here is that you think we'll see more in M&A.
Yeah, I think that's a good point. I mean, there's always multiple things going on, but so now you have the Horizon Therapeutics deal with Amgen. You have Pfizer buying Seagen. Lilly announced a deal today. So I do think that this win sort of is a signal to some of the acquirers that, it might be a little bit easier to get these things done.
Got it. Still, to date, Elon Musk's purchase of Twitter is the biggest acquisition by dollar amount. That might get dethroned, although as the most overpriced deal of the decade, I think he's a solid winner.
Yeah. Biggest under the Biden administration for sure.
Thanks. President Biden says Russia's already lost its war in Ukraine, but is NATO doing enough to offer security assurances?